Is PayPal's new stablecoin a trap? Is Huobi the next FTX in the making? And why is Cathie Wood saying the Bitcoin ETF could be delayed? This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice and we wish you the best of luck in your crypto ventures. This week, there are 3 events that stand out as essential to watch as they could potentially influence market trends and investor sentiment. This Thursday at 8:30 a.m. EST is the CPI data. The Consumer Price Index is a critical economic indicator. This measurement offers insight into the inflationary pressures within an economy. A higher than expected CPI could lead to increased speculation about the future interest rate hikes by central banks, potentially impacting various asset classes including stocks, bonds, and cryptocurrencies. Then on Friday is the PPI data at 8:30 a.m. EST. The PPI measures the average change over time in the prices received by domestic producers for their output. This upstream inflation can eventually trickle down to consumer prices, making it a crucial gauge for inflation expectations. As with the CPI, a higher than expected PPI reading could fuel discussions about inflation and its implications for monetary policy. Then on Sunday is the deadline for the SEC to respond regarding ARK Invest spot Bitcoin ETF. And since the markets will be closed on Sunday, we could expect to hear from them this Friday or on Monday next week. If the Bitcoin ETF is approved, it could lead to an influx of capital from institutional investors seeking regulated exposure to the digital asset. This decision is not only relevant to the cryptocurrency market, but also has broader implications for the broader financial landscape. The decision's outcome could potentially trigger price movements in the Bitcoin market and influence the sentiment of retail and institutional investors alike. ARK Invest Management founder and CEO Cathie Wood has reportedly suggested that the United States Securities and Exchange Commission will approve multiple spot Bitcoin ETFs at the same time.
You filed before BlackRock, but BlackRock came in with the surveillance sharing agreement with Coinbase. That was novel, right? Now we're looking in the future, there's talk of a common clock where the SEC could approve a bunch of ETFs at once, putting you on a level playing field with BlackRock and others. What's your take on how this will play out, given you filed earlier?
I think you're probably right that August 13th will come and go. And I think the SEC, if it's going to approve a Bitcoin ETF, will approve more than one at once.
Cathie Wood's remarks were similar to a proposal by Grayscale, the company currently suing the SEC over its refusal to accept an application allowing its Bitcoin trust to be converted into a spot Bitcoin ETF. In July, Grayscale's legal team submitted a letter to the SEC requesting that the regulator approve all Bitcoin ETFs at the same time to avoid one having an advantage over the other. Cathie Wood suggests that the application's deadline would be extended by the SEC. As ARK filed the paperwork in May 2023, the SEC has a maximum of 240 days until January 2024 to reach a final decision. I do agree with Cathie Wood that the SEC will delay the ETF so that they have more time. Right now, the company being used for the surveillance sharing agreement in all the ETFs is Coinbase, a company that the SEC is currently suing. I can't imagine with the current SEC chair being crypto-hating Gary Gensler that he would accept a Bitcoin ETF and make his current lawsuit with Coinbase that much harder. I believe he will push the deadline, leading to the price of Bitcoin to drop as everyone is waiting for the decision on August 13th. We also have a new crypto gaming channel called Fungible Games, where we've been posting great videos about the Web3 gaming space, keeping you up to date with everything happening there. I'll leave a link to our latest video down below, so make sure to go check it out and tell them I sent you. Just as the crypto industry was finally getting past the fallout from the FTX mega fraud, a new scandal is brewing, this one involving Huobi, a Seychelles-registered exchange that's one of the world's largest. Based on what we know, it's too early to say whether Huobi is going the way of FTX, but there's some reason to worry. Huobi is still operating, but there have been massive outflows from the exchange, which holds many of its assets in token projects tied to Justin Sun, a practice reminiscent of FTX, whose balance sheet was loaded with Sam coins tied to its crooked founder. Even though Huobi has denied the rumors, the outflow of capital from the exchange is undeniable. But these aren't the platform's only problems. In May, it had to shut down its operations in Malaysia after the Securities Commission of Malaysia intervened. In fact, the exchange had not registered as a local cryptocurrency operator, which meant that they had been operating illegally, leading to their website and mobile apps being blocked in the country. Earlier in the year, the exchange said it was planning to lay off about 20% of its workforce, aiming to maintain a very lean team due to adverse changes in the industry and declines in the cryptocurrency asset valuations. The implications of a crypto exchange the size of Huobi being insolvent could have devastating effects on the crypto market. It may not be as big as FTX, but the current bearish climate around the market would likely push the market further down if Huobi were declared insolvent. For now, overall crypto prices are stable and there's no reason to hit the panic button, but if things unravel, it will be due to the lack of transparency on the part of major crypto companies. The collapse of FTX, which took place nearly a year ago, was supposed to be a bitter lesson that would lead to the crypto industry changing its ways. Recent events, though, suggest that many people failed to learn that lesson. On-chain data shows that a whale made 2 large deposits into Huobi, boosting the exchange's holdings of USDT and Ether. The whale made the first transfer of 200 million USDT on Tuesday morning, Asia time, followed by a second transaction of 5,000 ETH, valued at over $9 million. A Huobi spokesperson denied that the address belonged to Justin Sun. The address is tagged as one of the top 10 holders of the TRX token. The deposits bring Huobi's supply of USDT up to $273 million, according to DeFi Llama. Huobi also has a balance of 400 million ST USDT, a Sun-backed project described as the first real-world asset protocol on the Tron network, though it's not yet widely supported. These transactions come as outflows from Huobi continue. Data from Nansen shows that in the last week, $92.2 million in Ethereum-based tokens have flowed off the exchange, while $101 million in total across all blockchains has moved in the same time period. Like I said before, it's really hard to know all the details and what will come of this, but it's better to be safe than sorry, so moving coins off centralized exchanges and into self-custody wallets is advisable regardless of the outcome. We've also just posted a video about the 3 altcoins that whales are secretly buying right now, which could be very helpful to know as whales usually have the alpha on tokens, so check out that video as well, link down below. The launch of the PayPal USD stablecoin by PayPal and Paxos is welcomed by the crypto community. However, the decentralization principle of the crypto community took a hit as Paxos can suspend PYUSD's authorization and transfer functions, as well as seize or freeze assets in security threat cases. The PayPal USD stablecoin issued by Paxos has centralization and security issues according to its GitHub account. Paxos can suspend authorization and transfer functions for PYUSD in the event of a serious security threat. Paxos can also freeze or seize the assets of anyone when required by the government agencies or departments. The asset protection role function allows the firm to freeze or wipe balances of any account. However, Paxos said the freezing of assets will be rare as it will not perform the freezing operation itself. Similarly, the USDT and the USDC stablecoin also have blacklisting capabilities. Centralization risks caused USDT and USDC to face several market cap losses last year as the community moved to other stablecoins. Also, the ERC20 stablecoin PYUSD is written on Solidity version 4.24, while the latest version is 8.21. Some people raise serious security concerns due to more documented bugs in the older version. Chainlink God on Twitter wrote a thread discussing PayPal stablecoin, saying PayPal has majority market share of online payment processing, over 400 million active users globally, and 30 million plus merchant accounts. PayPal launching their stablecoin legitimizes crypto, Web3, and stablecoins for normies and regulators. The fact that PayPal is issuing PYUSD on the public Ethereum blockchain instead of a private PayPal chain shows the power of network effects. No doubt they will expand to other chains as well, just as other stablecoins have, to obtain more market share. The market cap of all stablecoins is over $122 billion, peaking at $180 billion a year ago. While the amount circulating has downtrended during the bear market, it has held up much better than the price of most tokens. PYUSD marks a strong signal to other payment processors and financial market service providers that they need to take stablecoins and Web3 seriously. This move by PayPal with PYUSD, however, is an extremely positive sign for Web3's adoption. While I do agree with him that this is good for the adoption of Web3 and the stablecoin space, making it more competitive for companies, leading to better products for the customers, I personally won't be using the stablecoin. Even though USDT, USDC, and PYUSD can all freeze or wipe your accounts, I'll never forget what PayPal tried to do just months ago, where they were going to deduct $2,500 from your account for everything they deemed as misinformation. This came at the time when they were freezing bank accounts of truckers protesting in Canada, where these big financial companies thought that they could just sneak this new policy in. I have no doubt in my mind that this is a first step towards CBDCs, and PayPal is just not the place I'd park all my stablecoins if I wanted to be financially free, but that's just me. That's it for your Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.